Good morning. Welcome, everyone. This is an open meeting of the Public Company Accounting Oversight Board on August 15, 2012. We welcome those of you who have joined us today, both in person and listening to the webcast of this meeting. Today, the board will consider a recommendation to adopt a new auditing standard that would supersede the board's interim standard on communication with audit committees and related amendments to the board standards. Before we proceed with the agenda, I will note for the record that all board members are present. The first and only order of business before the board today is a staff recommendation that the board can adopt an auditing standard on communications with audit committees. And to present our staff's recommendation on the agenda item, I will turn to our Chief Auditor, Martin Baumann. Mr. Baumann.
Good morning, Mr. Chairman and members of the board. We are pleased this morning to recommend that the board adopt auditing standard number 16, entitled Communications with Audit Committees. The communication between the auditor and the audit committee is an extremely important aspect of the audit. The audit committee plays a fundamental role in protecting the interests of investors by assisting the board of directors in fulfilling its responsibility to company shareholders and others to oversee the integrity of the company's financial reporting process. AS 16 requires the auditor to communicate the most important aspects of the audit and the financial statements to the audit committee. This helps the auditor by providing a forum beyond management for discussion of these important matters with those charged with oversight of the financial reporting process. The audit committee also benefits by being informed of critical accounting and disclosure matters, including the auditor's evaluation of these matters that are so important to the audit committee's oversight role. I believe auditing standard number 16 can significantly improve audit quality. Jennifer Rand and Jessica Watts from the Office of the Chief Auditor will provide further details about auditing standard number 16. Before I turn it over to them, I'd like to thank Jennifer, Jessica, and Hasnat Ahmad for their extraordinary efforts in the development of this standard. I'd also like to recognize the many other people who have made substantial contributions to the project. First, I'd like to thank Karen Burgess in my department, and Bob Burns, Nina Majiri-Azad, and Vince Meehan in the Office of General Counsel for their thoughtful insights. Second, I appreciate the contributions of our colleagues in inspections, enforcement, and especially in the Office of Research and Analysis, including Andres Vanelli, our Chief Economist, and Yana Hranayova, our Deputy Chief Economist. And finally, I'd like to thank the staff of the Securities and Exchange Commission who provided timely and helpful advice, assistance to us in this project. Jennifer?
Thank you, Marty. Good morning, Mr. Chairman and members of the board. Over the past several years, we have given substantial consideration to and performed much public outreach on enhancing the auditor's communications with the audit committee. The project was influenced by a number of factors, including the increased use of risk-based audit methodologies by accounting firms, as well as increased emphasis on judgments and estimates in the financial reporting frameworks. The board's standing advisory group has also discussed auditor communications with the audit committee on several occasions and has expressed support for a new standard. The standard was originally proposed on March 29, 2010. In September of that same year, the comment period was reopened and the board held a public roundtable to explore some of the key issues commenters raised and develop ideas on how to further improve communications between the auditor and the audit committee. The board received 44 comment letters on the original proposal, including the reopened comment period. After consideration of comments, the board reproposed the standard on December 20, 2011. The board received 39 comment letters in response to the reproposed standard. Most commenters were very supportive of the board's efforts to enhance communications between the auditor and the audit committee. Those commenters agreed that fuller and more relevant communications between the auditor and the audit committee would allow the auditor to perform a more informed and thus more effective audit, and also would enable the audit committee to more effectively fulfill its oversight responsibilities regarding the financial reporting process. Our overall approach in developing the standard included a number of factors, such as developing a standard that is scalable based on a company's size and complexity. For example, an auditor of a smaller, less complex company with fewer difficult auditing or accounting matters may have fewer matters to communicate than for an audit of a larger and more complex company. Also, retaining the pre-existing communication requirements, incorporating communication requirements already imposed by the Sarbanes-Oxley Act and related SEC rules, and linking new communication requirements to related performance requirements in our standards. It also included listing other PCAOB standards and rules that require audit committee communications so that the communication requirements and other standards can be easily accessed in one place. Also, focusing the communication on significant matters related to the audit, providing the auditor with flexibility to communicate orally or in writing, and recognizing that management, as well as the auditor, may discuss issues relating to the company's financial statements with the audit committee, and that it would not be cost-effective or practical for the audit committee to receive the same communication twice. Auditing Standard 16 is designed to encourage two-way effective communication throughout the audit and to assist both parties in understanding matters that are relevant to the audit. I will now turn it over to Jessica to provide an overview of Auditing Standard number 16, including some of the standard's key requirements.
Thank you, Jennifer. Auditing Standard number 16 was developed in recognition that both the auditor and the audit committee benefit from a meaningful exchange of information regarding significant risks of material misstatement of the financial statements and other matters that may affect the company's financial reporting. The standard replaces current standards AU Section 380, Communication with Audit Committees, and AU Section 310, Appointment of the Independent Auditor. Auditing Standard number 16 improves the current communication requirements by indicating that communications between the auditor and the audit committee are an integral to the audit, and that the communication should occur in a timely manner prior to the issuance of the auditor's report. Communication of matters in a timely manner and prior to the issuance of the auditor's report will allow the audit committee to take appropriate action to address the matters communicated by the auditor. The existing communication requirement in AU Section 380 indicate that audit committee communications are incidental to the audit and are not required to occur prior to the issuance of the auditor's report. The standard starts with establishing an understanding of the terms of the audit with the audit committee. The Sarbanes-Oxley Act indicates that the audit committee of a listed company is responsible for the appointment and compensation of the auditor. Auditing Standard number 16 aligns the requirement with the provisions of the Act by requiring the auditor to establish the understanding of the terms of the audit engagement with the audit committee, whereas currently AU Section 310 requires the understanding to be established with the client. Auditing Standard number 16 also requires the auditor to record the terms of the engagement in an engagement letter and determine that the audit committee has acknowledged and agreed to those terms. Auditing Standard number 16 expands the inquiries of the audit committee required by other PCAOB standards by requiring the auditor to inquire of the audit committee about whether it is aware of matters relevant to the audit, including, but not limited to, violations or possible violations of laws or regulations. Additionally, Auditing Standard number 16 adds new communication requirements that provide the audit committee with information about significant aspects of the audit. These communications are linked to the results of the audit procedures or the conduct of the audit. Among other matters, the communication requirements in Auditing Standard number 16 include an overview of the overall audit strategy, including the timing of the audit, significant risks the auditor identified, and significant changes to the planned audit strategy or significant risks. Information about others involved in the audit, including internal auditors or other independent public accounting firms. Information regarding the company's accounting policies, practices, estimates, and significant unusual transactions. And the auditor's evaluation of the quality of the company's financial reporting, including conclusions regarding critical accounting estimates and the company's financial statement presentation. difficult or contentious matters for which the auditor consulted outside the engagement team, the auditor's evaluation of the company's ability to continue as a going concern, and difficulties encountered in performing the audit. The standard also incorporates the communication requirements already imposed by the SEC rules, such as communication of critical accounting policies and practices to be used and alternative accounting treatments discussed with management. Appendix B of Auditing Standard Number 16 provides a list of other PCAOB standards that require auditor communications with the Audit Committee. For example, communications regarding control deficiencies and interim financial information. Auditing Standard Number 16 retains the ability for the auditor to communicate the matters described in the standard orally or in writing. The intention of the standard is to promote effective two-way communication between the auditor and the Audit Committee. Effective communication may involve many forms, such as presentations, charts, written reports, or robust discussions. Communications that are tailored to the circumstances and informative rather than boilerplate or standardized will enable the auditor and the Audit Committee to engage in a dialogue that is more likely to benefit the Audit Committee in conducting its oversight responsibilities and the auditor in conducting an effective audit. In addition to Auditing Standard Number 16, Appendix 2 of the Adopting and Release includes a transitional amendments which makes the communication requirements in AU Section 380 applicable to the audits of non-issuers and brokers and dealers prior to the effective date of Auditing Standard Number 16. As previously discussed, the Board revised and reproposed the standard on December 20th, 2011. Most commenters were generally supportive of the revised standard. We have carefully considered all comments received and have made changes to the standard where appropriate. Our consideration of the comments and responses are included in Appendix 4 of the release. Finally, I should note that if the Board adopts Auditing Standard Number 16, this will be the first standard adopted by the Board subsequent to the enactment of the Jobs Act earlier this year. Under the Act, any additional rules adopted by the Board subsequent to April 5th, 2012 do not apply to the audits of emerging growth companies, or EGCs, unless the SEC determines that the application of such additional requirements is necessary or appropriate in the public interest after considering the protection of investors and whether the action will promote efficiency, competition, and capital formation. Accordingly, Auditing Standard Number 16 is subject to a separate determination by the SEC regarding its applicability to the audits of EGCs. To assist the SEC in making this determination, our office, working in conjunction with the economists in the Office of Research and Analysis and attorneys in our General Counsel's office, have prepared an analysis of the application of Auditing Standard Number 16 to audits of EGCs. In light of the Jobs Act, if the Board adopts Auditing Standard Number 16, this analysis will be provided to the SEC, along with a request that the SEC approve application of the standard to the audits of EGCs. Accordingly, the staff recommends that the Board adopt Auditing Standard Number 16, the related amendments to PCAOB standards, and the transitional amendments to AU Section 380, and authorize the staff to submit the standard to the Securities and Exchange Commission for approval pursuant to Section 107 of the Sarbanes-Oxley Act, and to request that the SEC approve the application of the standard to the audits of emerging growth companies pursuant to Section 103 of that Act. We'd be happy to answer any questions you might have.
Thank you. Thank you, Mr. Baumann, Ms. Rand, Ms. Watts. I also want to thank others in the Office of the Chief Auditor, Hasnat Ahmad, Karen Burgess, our General Counsel, Gordon Seymour, his colleagues Bob Burns, Nina Mojiri Azad, Vince Meehan, and our Chief Economist, Andres Finelli, and our Deputy Chief Economist, Yana Haraneva. We are very proud of the work you've done and the effort you've put into getting us to this point today. The new standard on auditor communications with audit committees will become PCAOB Auditing Standard Number 16. This standard has benefited from an enormous amount of public outreach about how to enhance investor protection by providing for relevant and timely communication between the auditor and an issuer's audit committee. As Jennifer mentioned, the Board first proposed an earlier version in March of 2010, received several rounds of comment, including comment at a public roundtable in September of 2010. We reproposed the standard in December of 2011. Through this process, the board received a wealth of advice about real situations where a robust dialogue between the auditor and an audit committee made a difference. We also received advice on situations where a more robust discussion could have made a difference, where a better understanding of matters known to the auditor could have armed an audit committee with critical information to probe areas that presented risk to investors. Indeed, in my own experience as a counselor to boards, many an audit committee has wondered with regret, why didn't the auditors tell us about this? Financial reporting failures can lead to enormous legal fees, fines, ruined careers, and damaged investor confidence. Perceived constraints on auditor communication with audit committees do nothing to avoid these risks. AS 16 should eliminate perceived constraints and foster robust communication of auditor to audit committee. AS 16 supports the critical role of auditors and audit committees in financial reporting and corporate governance. U.S. securities markets serve a purpose that is fundamentally different from many others in the world. Our markets provide for formation of capital and ownership by dispersing minority interests widely among millions of individual savers who are dependent on the preservation and growth of their investment for their savings and retirement. This system has fueled unprecedented, lasting, and distributed economic growth for 3/4 of a century. But minority ownership bears the obvious and inherent risks associated with entrusting an agent with other people's money. It would be enormously expensive for minority investors directly to monitor management's use of funds, not to mention inefficient and counterproductive, given the expected expertise of management and the likely lack of expertise of the average investor or share owner. Instead, investors rely on auditors and audit committees as intermediary agents to attend to that risk. The audit committee directly oversees management's reporting of the company's financial position and results to investors. Auditors validate. Naturally, both agents should support each other in their work with an open dialogue about how to protect investors from misleading or inadequate management reports. The PCAOB has no authority over audit committees, and through this standard we exercise no such authority. But I do believe that the standard appropriately describes the best auditor practices that we have learned from experience and advice. I believe the standard moves the auditor's communication with the audit committee away from compliance checklists, decisively in the direction of meaningful, effective interchange. We have taken care to avoid miring both the auditor and the audit committee in minutia. If salient information is buried in abstruse detail, it would risk circumvention of the standard. But as I said when we reproposed this standard, the audit committee and auditors themselves play more of a role than the PCAOB or any audit standard can in ensuring that their relationship is not mere compliance exercise. Any process can be reduced to a compliance exercise, but auditors should make use of the new AS 16 to accomplish the standard's stated purpose of enhancing audit committee efficiency and effectiveness. Will now turn to my fellow board members for statements they wish to make. We will withhold questions until all board members have had a chance to make a statement. Then we will have time for questions and further discussion. Board Member Harris.
Thank you, Mr. Chairman. And at the outset, I too want to acknowledge the staff's extraordinary efforts on this standard. I support the board's adoption of auditing standard number 16 and the related amendments to communications with audit committees. I believe this standard will benefit investors because it strengthens the audit committee's oversight function by clarifying the types and timing of communications an auditor is required to make to the audit committee. As mentioned, AS 16 replaces two standards that until now defined the relationship between auditors and the audit committee. These standards were adopted prior to the passage of the Sarbanes-Oxley Act, when corporate management of a listed company typically hired, retained, and had oversight of the work of the auditor. In those days, the audit committee served a less prominent role. During the testimony that led to the passage of the Sarbanes-Oxley Act, however, Congress heard reports of clear conflicts of interest that led to financial reporting failures by, among others, corporate management and a self-regulated auditing profession. Congress also heard reports of weak audit committees and ineffective oversight of companies' financial reporting processes. Investors and employees bore the ultimate cost of these failures in lost jobs, lost investments, lost pensions, and lost confidence in our country's securities markets. The Sarbanes-Oxley Act addressed these conflicts and failures in a variety of ways, including strengthening audit committees by making them independent of management. The Act also made clear the need for timely, consistent, and substantive communication between auditors and audit committees. The original standards being replaced today simply do not reflect the responsibilities and communication requirements of auditors and audit committees following the enactment of the Sarbanes-Oxley Act. For example, as Jessica Watts mentioned, they refer to communications by an auditor to an audit committee as merely incidental to the audit and not required before the auditor's report is issued. The Act makes clear that communications of matters that may pose significant risk for the company are a necessary part of an effective audit and effective audit committee oversight. AES 16 requires auditors to communicate the audit strategy and results of the audit in a timely manner before the report is completed. This enables the auditor and the audit committee to take appropriate action to address the matters discussed. The need for improved communications between auditors and audit committees has only grown since the Act was passed in 2002. Given today's economic environment, it is vitally important that auditors and audit committees be fully informed about the matters that may affect the assumptions, estimates, events, and conditions reflected in the company's financial reports. The standards we are considering today are designed to assist in achieving that goal. The ultimate beneficiary of these standards are investors, as better informed audit committees and auditors should enhance both the quality of the audit and the audit committee's oversight of financial reporting. Though this standard includes a number of requirements that should directly benefit investors, I would like to highlight three in particular. First, this standard requires auditors to communicate significant, unusual transactions to the audit committee on a timely basis. Auditors will be required to explain their understanding of the business rationale for such transactions. Communication between the auditor and the audit committee will allow the audit committee to gain insight and take appropriate actions, if necessary, to address the financial statement or disclosure impact of these transactions. Second, this standard requires the auditor to communicate to the audit committee its opinion on the company's ability to continue as a going concern. Such communications benefit investors because they bolster the independent audit committee's role in overseeing the company's financial reporting process. Third, this standard requires the auditor to inform the audit committee of the auditor's plans to use other firms to perform required audit procedures. This provision is particularly important in today's business environment, where key segments of many audits are conducted in isolated locations around the world. Knowing that another firm is performing that work may lead to additional questions from the audit committee about the quality of the work performed and possibly whether the firm's work has been inspected by the PCAOB. Finally, this standard encourages robust two-way communications between the auditor and audit committee, which should improve the quality and integrity of the audit. As the board made clear recently in its release titled Information for Audit Committees about the PCAOB inspection process, any full and frank discussion between auditors and audit committees also should include a review of the firm's PCAOB inspection reports. Those inspection reports, combined with the new communications required by this standard, should further enhance the role of the independent audit committee and thereby benefit investors. This standard, in my view, updates and improves the prior standard, but the board's analysis obviously cannot stop there. The remaining question is, at what cost? I believe the costs associated with this standard are likely to be minimal because AES 16 focuses on communicating the results of audit procedures the auditor is already required to perform. In addition, the communications under this standard can be scaled up or down to fit the size and complexity of the company being audited. The value to investors of this improved two-way dialogue, while not easily quantifiable, seems clear. An informed audit committee will be in a much better position to execute its responsibilities to oversee the financial reporting process, more effectively manage the auditor relationship, and enhance investor protection by helping to ensure the integrity of the financial statements. And a better informed auditor should perform a more effective audit. Before closing, I would like to state as a general proposition, I believe that carefully targeted regulation is key to effectively balancing the costs of improving audit quality with the benefits of protecting investors. With this in mind, I believe we must continue to work to explicitly design our standards to address clearly defined problems and known areas of weakness in the audit process, and to the extent possible, make them shorter and less complex while always keeping in mind their economic implications. I believe that AS 16 is a step in the right direction. And Mr. Chairman, I would ask that my full statement be placed in the record.
Thank you. Board Member Ferguson.
Thank you, Mr. Chairman. I have a full statement, too, which I'm not going to read here. I'm just going to make a couple of points. Let me start off by thanking the staff for your very dedicated and long, hard, one might even say dogged work in pursuing this project over 2 years, and taking into account the extraordinary amount of feedback you did and the changes in the statute, the changes in our own rules that went into it. So it's really been quite an extraordinary job. But I want to focus on just two things here. The first being the process by which we looked at this standard, the whole sort of efficiency process that we looked at it. How do we come up with a standard here that would have the maximum effect at the minimum cost and disruption to the audit? And I think you've done an extraordinary job on that. First of all, the standard builds, as Board Member Harris said, builds on two existing standards. It incorporates part of the requirements of those standards. And when it adds new standards, the standards that it adds are merely requirements of things that the auditor should already have already been doing in the audit if it is a PCAOB compliant audit. So the auditor is not going to have to do more audit work. It's true, there are certain required communications now that may have or may not have been being done in the past, but it's not requiring more audit work. And these communications don't have to be in writing. They can be done orally. So I think that we will establish certain minimum standards of communication here without a lot of additional costs. I think that's definitely be good, and I believe that those communications, if only because they will create uniformity with respect to what is communicated to audit committees of public companies around this country, should increase audit quality. And the other point that I want to concentrate on are the corporate governance implications of this. In adopting the standard, the board has been fully aware and fully cognizant of the complex relationship between federal and state law and the intersecting jurisdiction of different legal regimes and regulatory bodies in the matter of corporate governance. We've also been cognizant of the limitations of our own jurisdictional authorities here, that we do not have jurisdiction over audit committees. With that said, though, we do believe that increasing what auditors communicate to audit committees will improve the corporate governance process in general. Specifically, I want to address the question that certain commentators have said when they commented on these standards, that it should be left to audit committees to inquire about what they want to know about the auditors, and auditors should not be forced to give them information that the audit committee may find superfluous. And I think there are two reasons that this argument is not persuasive. The first is that the board's experience through its inspection and standard setting process has convinced at least this board member that the quality and experience of auditors and audit committees of U.S. public companies varies widely. Many skilled auditors already routinely communicate to their audit committees all of the matters that this standard would require to be communicated. Some auditors, however, do not. And some audit committee members either do not have the knowledge or the experience to inquire on their own into these matters that the boards believe are critical components of the assessment of audit risk. By mandating communications about areas of critical audit risk by the auditor to the audit committee, the board believes that all audit committees of U.S. public companies will be informed of these matters and that there will be a resulting improvement in audit quality. And the second answer is that audit committee members remain free to use or ignore the communication information as they deem appropriate. Nothing in this standard limits the communications between auditors and audit committees. The standard sets minimum but not maximum standards for communications. If the communicated information is deemed irrelevant, it can be overlooked. If audit committees want additional or more detailed information about particular topics, their members remain free to ask their auditors any questions they believe would help them understand the audit and the finances of the company they oversee. If there are areas not included in the required communications that audit committees believe would be informative to their work, they remain free to inquire of their auditors about those matters as well. In short, arguments that this standard somehow inhibits the free flow of information between auditors and audit committees are unpersuasive. And for all of these reasons, I support the adoption of the standard in the form presented to the board, and I support the recommendation that it be applied to emerging growth companies. Thank you, Mr. Chairman.
Thank you. Board Member Hanson.
Thank you. I also have a prepared statement that I'm just going to summarize some of the points out of it. Overall, I support the standard, and I really want to thank the staff, echo the comments made by my fellow board members for all the hard work you've done, our staff as well as the staff at the SEC. We've heard a lot from audit committees in the past year at our different formal events, including the Investor Advisory Group, the Standing Advisory Group. We've got some very good audit committee members on those advisory groups, and we hear a lot from them. We also heard from a number of audit committee members at our recent roundtables on auditor independence and heard good things from them. And I've had many one-on-one discussions with audit committee members, and it's clear that there at least some audit committee members are doing an outstanding job at exactly what the Sarbanes-Oxley Act envisioned. And I think part of our job is to help other audit committee members get to that high level. So I think that AS-16 is intended to help audit committee members by providing both auditors and audit committees with the information they need to discharge their responsibilities, and I agree with the staff that this will improve audit quality. And as my fellow board members have mentioned, we also issued this release on information from audit committees about the inspection process. Important thing, if audit committees aren't aware of this, I encourage you to look at that. And I further believe that the PCAOB could and should share as much as possible with audit committees about our insights into the public company auditing, and I personally am committed to seeking ways to do more of that. As has been pointed out, audit committee communications have been required for many years. The existing AU Section 380 was effective in 1989 and provided the foundation for which AS-16 was built. And Jessica did a good job of highlighting the things that are new, so I won't repeat them. But I just want to emphasize one particular thing that especially Steve just mentioned himself, and that's this is really about communications with the audit committee, not just information sent to the audit committee. And we're mindful of this standard potentially becoming just another checklist boilerplate exercise of going through a list of requirements. And we heard from commenters in the process that they didn't want that, and we've been responsive to those comments. And I agree with the things we've done to change that. And I observe that while all the things that we talk about in the standard are important, it's really the responsibility of both the auditor and the audit committee to make sure that there's effective, timely communications about the things that are most important for the audit and the financial statements. And to emphasize what's already been pointed out, that the new requirements build on what auditors are already doing, either what they're already required to communicate or what they're required to do, but this adds on additional requirement to communicate what they've done and observed. And we do see that many auditors already communicate most of what's in AS-16, so I think this is going to raise the bar in performance for all auditors and help all audit committees do their best work. The timetable to get this done for auditors is very short, and I'm personally concerned about that, and we'll ask Marty a few questions about that when we turn to questions. After we issue the standard, there's another process that the SEC goes through to approve this, so we're not done. It's not over until the SEC approves it. But nonetheless, I really encourage all the firms to move quickly to revise their tools, their sample letters, their guidance, and get the training in place to gear up to do this. And I recognize the challenges associated with balancing the time commitments between now and the end of 2012, when important audit planning and interim testing is taking place for calendar year-end companies. But we felt it was important to make AS-16 effective in 2013 to provide audit committees with the information that they need. And as has already been pointed out, nothing precludes an auditor from already communicating the things that will be required by AS16 or early adopting it, as the lingo is. And even if an audit firm doesn't early adopt, and we've heard that some may do that, nothing precludes an audit committee from asking the questions that they should ask to get at the points that we're making with AS16. Just a couple comments on the Jobs Act, as has been talked about. I support the recommendation we're making that the SEC determine that this is in the public interest and in consideration of the protection of investors, and and that will promote efficiency, competition, and capital formation. So it's been a real eye-opening and learning experience for us as we've been through this. And through this process, it's just become clear to me that we've got much work to do to assess the economic consequence of other pending standard-setting projects to make similar recommendations on those projects when applicable. I personally am not convinced that every single project we have would necessarily apply to EGCs. So we'll see what happens as we go through that process. And we also have a significant task in front of us to evaluate how to incorporate more robust economic analysis into all of our standard-setting process, and more generally how to better begin with a clear articulation of the problem that we're trying to solve, as well as the potential solutions. So with that, I will turn it over to my fellow board member, Ms. Frenzel.
Yeah, Ms. Frenzel.
Thank you. I agree with the comments of my fellow board members, and I'll try not to duplicate too much of what has already been said. The standard that we're issuing today will improve the audit process by fostering constructive dialogue between the auditor and the audit committee. This is significant due to the essential role that the audit committee plays in corporate governance and in overseeing a company's financial reporting process, as well as the independent audit. The PCAOB and audit committees have mutual interests here in strengthening audit quality, increasing reliability and public confidence in audited financial statements, and in protecting investors. This standard provides an important bridge between the auditors and the audit committees via communications about key financial reporting issues that are significant and sensitive. So within this framework, the board is seeking to support the oversight role of the audit committees by really focusing auditors' communications on significant issues that should be discussed. Both the auditor and the audit committee will benefit from this exchange of information, especially about matters that affect the integrity of the company's financial reports. Such communications will also improve the audit process. So the bottom line here is that this standard will really be beneficial to both the audit and the audit committee's oversight process while minimizing costs. The standard will also benefit corporate governance and investor protection. Auditing standard number 16 is based on a practical, common sense approach of leveraging the work already performed during an audit and targeting the communications to cover areas that are significant to the financial reporting process. The standard also includes flexibility for application in different sizes and different types of entities, again, to minimize the cost and the disruption associated with the new standard. Adoption of this standard is in the public interest and protects investors by establishing requirements that enhance the relevance of the audit process and the audit committee's oversight process. For all of those reasons, I support the adoption of this standard and the related amendments and the recommendation that it apply to emerging growth companies. And I want to thank the staff because this has been a long journey, but I believe it has resulted in a very solid and good standard that will benefit all of the parties involved.
Thank you. We have time for questions. Board Member Frenzel, do you want to pose some questions to the staff?
Certainly. One of the issues that we've mentioned several times is that the PCAOB does not have jurisdiction over audit committees, yet this standard deals with audit committees and auditors' communications with audit committees. And we've made judgments about information that is important for audit committees to receive and potentially act on, although we're not telling audit committees that they need to act on that. Can you explain how this new communication requirement may affect audit committees' responsibilities?
I'll start off. This standard affects only auditors' responsibilities. It affects the auditor's responsibilities as to how and what they communicate and when they communicate to the audit committee. So we do not, as was mentioned, and as you're aware, of course, we do not have authority over audit committees, but we do have the authority to make auditors communicate on a timely basis those matters that are most relevant to the audit committee's understanding of the audit and of the financial statements. There is one area in here where we've asked the auditor to inquire of the audit committee about things that they know that are relevant to the audit, but we think that's an important aspect of inquiries as part of what the auditor does. So it doesn't change in any fashion an audit committee's responsibility, or it doesn't change in any way management's responsibilities. It deals with those areas where we have authority, and that is the auditor's requirements.
Board Member Hanson, question?
I'm going to start with a few questions on what I ended my comments with about the implementation and the timetable to do that. There are obviously large firms headquartered in New York that have resources to do this, and there might be regional firms headquartered in the West Coast that have some resources. There might be small firms in New Jersey that don't have the significant resources, and there might be firms around the world that still have to come to grips with this as well. But if you could just highlight the action steps you think a firm should be taking now to implement this, and then also talk a little bit about what we really expect in the first quarter of 2013 when the interim requirements kick in.
Okay, I'll start with this one as well, since you said I'll direct it to Marty. So therefore I'll take it. We have had a reproposed standard out there for some time right now. The reproposal went out, Jessica?
December
20th.
Oh, 20.
December what?
20th.
December 20th, 2011.
11.
So for some time there's been a reproposed standard that I think auditors have had a chance to study and understand what's in there. In fact, I've had conversation with at least one firm that's talked about when is this final standard going to come out, because they wanted to put these requirements into their own methodology to effectively early adopt this current year. So I think it's well known what's in this standard by all auditors, or can be well known by all auditors. Certainly it's August right now. Plenty of time for firms to take what's in this standard, digest it. If they haven't done that already from what was in the reproposed standard, there are some changes in the final adopted standard here, or to be adopted standard. So I think there's plenty of time for firms to incorporate this into their methodologies and be prepared to deal with AS16 in 2013. Let me comment with respect to the question about what to do in the first quarter. The standard is effective for audits beginning after December 15th, 2012. So that means quarterly reviews in the first quarter of 2013 come under this standard. There's a discussion in the release of the matter that you raised about the timeliness of this standard coming out and first quarters and when it would be ultimately approved, hopefully by the SEC, and first quarterly reviews coming on the heels of that some 3 months or so later. Some, not many, but some did raise the question of, should we keep AU 380 in place for interim reviews in 2013 and AS16 in effect for year-end, if you will, for 2013, and not apply AS16 to quarterly reviews until 2014? We address that in the release and talk about that. We don't think that's practical, and we think it would create a lot of complexity. First of all, AS16 is not a year-end communication standard. The standard requires timely communications throughout the year, including discussion of the terms of the engagement up front, and as the auditor identifies any matters during the year, those matters should be communicated on a timely fashion if they're important to the audit. So even if AU 380 were the standard for the quarterly review, AS16 would still be there for the auditor to make timely communications about other things that are not in AU 380 based upon the general requirements under AS16. So operating within two standards, 380 and AS16, we think at the same time would be more complex than turning your attention fully to AS16. Beyond that, not all of the communication requirements of AS-16 have to be made in a quarter. AU 722, which governs interim financial reporting on the responsibilities of the auditor, and we cover on pages A49 through A52 of the release, talks about the fact that, of course, procedures for conducting a review of interim and financial information are different than procedures for an audit, and they relate primarily to analytical procedures, inquiries, and things of that nature. And so if the auditor, during those interim review procedures, comes aware of information that they determine is relevant to AS-16 that needs to be described to the audit committee based on what they become aware of in the interim review, then they should communicate that. But it's not a complete communication requirement of all that's in AS-16. So I hope I've dealt with that question. I think the release deals with it. I think it's a good question. We've stated our response to those who have raised this matter explicitly in the release.
Yeah. Board Member Ferguson.
I have a question that any of you can answer, whoever presses their buzzer fastest. And the AS-16 has a sort of curious definition saying that for non-issuers, if an audit committee doesn't exist, then the person responsible for overseeing the accounting and financial reporting person is the person that to whom the auditor should make the required communications. Is this designed to address only brokers and dealers, or are there any other issuers that would be covered by, or any other non-issuers who might be covered by this requirement?
Jessica had her finger on the button.
Okay.
We have no button, actually.
Well, whatever you do down there.
Well, primarily it's dealing with brokers and dealers because those are non-issuers that would have to apply their standards once the SEC determines that they would have to apply our standards. So primarily that's what we were thinking of when we said non-issuers were broker-dealers. There may be other non-issuers that also apply PCAOB standards, and then in those cases you would have, they would follow that definition for audit committees.
But that would be not something we would have any jurisdiction over, of those audits.
That's correct.
That's right.
So the only audits in which we would have jurisdiction in this case would be brokers and dealers.
Right.
Right. In discussions with our staff, we had discussed should it just be brokers and dealers, and our determination was non-issuers, although recognizing it's principally brokers and dealers, is most appropriate. There's also a Q&A, I believe, on the board's release that was issued in the early days of the PCAOB that talked about the applicability of our standards to those audits of companies that otherwise do not fall under a jurisdiction. So we didn't want to have anything that would be too limiting to others who may want to apply our standards,
Okay.
such as companies wanting to go public.
Board Member Harris.
This standard requires communications, among other things, of the company's significant unusual transactions, significant risks, and the auditor's evaluation of the company's ability to continue as a going concern. And I have 3 questions related to each of these. First of all, what are some specific examples of significant unusual transactions that you believe should be reported?
Some companies have been reported from time to time to enter into transactions that lack economic substance and are entered into primarily for an accounting result. Those types of transactions at times may be significant unusual transactions, and if they're lacking in economic substance and fall into the bucket of a significant unusual transaction outside the normal course of business, some type of arrangement that will achieve the earnings result or the capital result or whatever that the company wanted, we believe that should be communicated to the audit committee along with, as this standard indicates, the business rationale. Why does the auditor think that the company is entering into that transaction, to help the audit committee and the auditor together reflect on the appropriate disclosures that are being made so that investors get a true picture of what those types of transactions are doing to the financial performance, results, or condition of the company.
And then how about examples of significant risks that you envision being reported?
Well, significant risks is a term with respect to, and it's a very good question, I'm glad you asked that. significant risks are risks that are identified by the auditor as risks of material misstatement of the financial statements, as opposed to a significant risk which could be an operational risk that the company may have in its business, but does not directly relate to risk of material misstatement of the financial statements. And so significant risk could pertain to the risk of misstating complex estimates such as allowance for loan losses or complex valuations of illiquid securities or warranty reserves. So the auditor has to identify what are the areas that have the greatest risk of material misstatement of the financial statements because of the complexity or judgment in their determination. These are the matters that really have to be discussed with the audit committee so they can understand where the financial statements therefore are subject to the greatest degree of sensitivity or potentially manipulation, so that they can have further inquiry with the auditor and management about those matters and how they've been dealt with.
And then also,
I was just going to add on, everything Marty said was correct. I just wanted to add on that those are risks as part of the risk assessment standards that the board adopted 2 years ago. The auditor is required to identify those things that pose significant risks, and things that are identified by the auditor as significant risk require significant attention by the auditor. So significant, performing procedures, substantive procedures, sufficient procedures around those matters. And our risk assessment standards include a list of factors that the auditor should consider determining whether anything would be a significant risk. Some things are things that pose fraud risks. Revenue recognition in our standards is generally presumed to be a fraud risk. Significant related party transactions, complex unusual transactions. There's a list of things. So this communication is built off of requirements that the auditor is already required to perform as far as their thought process in identifying and assessing the risk of material misstatements to the financial statements.
That's a good addition because it reemphasizes the point that any of the communications that are being made in this standard are based upon what the auditor is already doing. The auditor had to identify those significant risks as part of the audit, and it's not an additional requirement here. Just the requirement is communication, not identification.
and then with respect to going concern, what enhanced communication are you looking for from the auditor with respect to his evaluation regarding a company's ability to continue as a going concern, and why is this provision needed?
I think this is an important addition. This is an area that was not covered in AU 380, and the auditing standard on going concern has several stages in it in terms of the auditor's evaluation of conditions that could lead the auditor to believe there could be doubts about a company's ability to continue as a going concern. There's a certain stage where if the auditor believes there is substantial doubt, they have to perform additional procedures, including asking the company about what plans they have to potentially mitigate that substantial doubt before the auditor formulates their final conclusion. At times, auditors can formulate a conclusion after reviewing information that management supplies, such as potentially selling assets or getting funding from another source that they hadn't previously gotten, that the auditor can become convinced that the substantial doubt has been mitigated and they don't have to report it to the shareholders. What this standard requires is for the auditor to communicate that interim stage to the audit committee so the audit committee can understand what the auditor is weighing in their decision as to whether or not there is substantial doubt about going concern that has to be reported to the shareholders or not, and the audit committee can weigh in on management's plans that the auditor is reviewing. So this significantly puts the audit committee into the equation in the consideration of what the auditor is doing around going concern.
For another round of questions, Board Member Franzel.
What were some of the obstacles that commenters cited, to the effective implementation of the standard, and how did the staff deal with those obstacles in formulating the final standard, and what obstacles may still exist for auditors who are trying to implement this standard going forward? And let me also just present the extreme situation. What would the impact be on the audit if the audit committee simply refused to receive these communications from the auditor?
Well, in the original proposed standard, one of the obstacles that was noted by commenters was the ability for management to communicate some of the matters that we had said the auditor should communicate. So in the reproposal process and then also in this final standard, we have clearly indicated that there are certain communications that management can communicate, and then the auditor would need to meet certain criteria for the auditor not to communicate those at the same level of detail as management. So we've tried to make it very clear that management has the ability to communicate without the auditor redoing it. So that was one that we had to deal with from commenters. Secondly, some commenters indicated that the number of communications could be excessive. We've tried to make the standard flexible to the circumstances or scalable to the circumstances, so that the communication is only required if the company has that situation. For example, if the auditor plans to use the work of the company's internal auditing function, then they would have to communicate the planned use of that internal audit function. If they're not, there's no communication. So we've tried to make it flexible so there's not this plethora of communications that may not be important. We've also tried to make the communications to just the most significant matters. A lot of people said that there was too many communications, so we've narrowed the communications to the more significant matters, the things that that may be of the most concern to audit committee members. And then another one that we've received, which was from audit committee members, and these were more sophisticated audit committee members, said, I already get a lot of this information, or I can ask for this information. And we understand that audit committee members who have had backgrounds as CFOs or as former auditors really know what information they want and what to ask for, but other audit committee members may not. So this is, in a way, leveling the playing field, that everybody would get the same type of information.
That's right. I think it's an important point that some of the board members made, that there are different levels of knowledge among audit committee members, and this reflects that fact.
And how about the extreme scenario that I presented, where the audit committee is just simply not understanding the need for the auditor to engage in this process and just not receiving these communications? What's the impact on the audit and the auditor?
There are other requirements and other standards, including AS5 and AS12, for the auditor to assess whether or not the audit committee, in performing its responsibilities, potentially there could be a weakness in internal controls, a significant deficiency or material weakness, if the auditor felt that the audit committee was not exercising its oversight responsibility. That's a very important aspect of internal controls over financial reporting. So if the audit committee was not acknowledging this, was not meeting to discuss with the auditor about these communications, there could be a material weakness in the internal controls in the company because of what the audit committee is, how they're behaving. Also, I think the auditor could be faced with potentially a scope limitation. There are inquiries the auditor has to make of the audit committee as part of this, and if they don't receive responses to those inquiries, I think the auditor has to evaluate, is there a scope limitation on the audit? Did you want to add to that, Jennifer?
No, I think that's right. I think part of your question was also effect on the audit. I could see if the audit committee isn't being responsive, then the auditor would be put in a position where they don't have comfort that there may be effective oversight of the financial reporting process. I could see that could mean the auditor may feel that they need to do additional work to get comfortable around certain things. If they had felt that the audit committee really was doing a good, strong oversight responsibility, they may feel less of a need to test practically every number, maybe not to that extent, but perform additional procedures. And also, I think it puts the auditor in a difficult spot as far as wondering, is there something that they might miss, and could the audit quality suffer, which I think then gets you to the path of a scope limitation if there's important information, or at least considering that. So there's certainly this standard is geared to the audit, but we do hope, or the spirit of this is for effective two-way communication between the auditor and the audit committee. And as you also rightly pointed out in your remarks, this really benefits both the auditor and the audit committee in the oversight of the financial reporting process.
Board Member Hanson?
One of the things that we did with AS 16 was we incorporated some of the requirements of the SEC. They either stem from the Exchange Act or something in Regulation SX. And I wonder if you could just highlight a few of those things that we included. And if you could clarify for me if those things are really become our requirements now as well as the requirements of the SEC, or if we were just merely referencing those requirements. And what I'm really thinking ahead of the future is if there's a question on interpretation of what something means, will that be up to us to interpret, since if it's our standard, we are responsible to figure out compliance, or if it's not really our standard?
I'll start with what we picked up from the SEC requirements. There's Rule 207 of the SEC incorporated some requirements, audit committee communication requirements from the Sarbanes-Oxley Act. And then we've also incorporated those into now AS 16. So those are to communicate all critical accounting policies and practices to be used, all alternative treatments permissible under the applicable financial reporting framework for policies and practices related to material items that have been discussed with management, including the ramifications of the use of such alternative disclosure and the treatment preferred by the auditor, and other material written communications between the auditor and management.
Well, certainly they're in our standard now. They'll be in AS 16, so they are requirements of an audit in accordance with PCAOB standards. So they're our requirements right now. So we would interpret them, but certainly to the extent there was some question, we could always discuss with the SEC whether or not they had a different view on that, on how to interpret this.
Okay, and as Board Member Harris pointed out, the elements of good regulation and keeping things as simple and straightforward as possible. Are there any things that, as we looked at the existing AU 380, that we took out that was no longer relevant or applicable, that to streamline what was in there?
We primarily retained what was in AU 380. However, in some cases, we have narrowed the communication to be if the auditor has identified a concern, there was a requirement for the auditor to communicate management's consultation with other accountants. And that was broader in 380. We've narrowed that to just if the auditor has identified a concern. There was another requirement in AU 380 regarding the auditor's communication regarding the clarity, completeness of the financial statements, and we have taken that and aligned it with AS 14, which is the evaluation of the financial statements. So we did get rid of what was in 380, or reformulated it to match what's in AS 14, the auditor's responsibilities related to evaluation of the financial statements.
I'd just like to add to that, kind of some of those examples are things I believe that we may have had in the original proposal. And we heard commenters say to us, like management consultations with other accountants, that that's too broad. Post-Sarbanes-Oxley, companies, many companies are as part of a good practice consulting with other accountants so they don't impair the independence of their independent auditor. And had said, that was just too broad, even though it's part of the standard today. The one about clarity, completeness, quality, that's in 380 today. But we received many commenters that said, we really don't understand. And we recognize that essentially none of the requirements, or certainly not like AS 16 is, in 380 are aligned, have links to where those requirements are included in the auditing standards for the auditors to perform that work around clarity, quality, completeness, et cetera. And so we really took a hard look in connection with the reproposal about taking comments in, things that we originally had, narrowing to the more significant, linking it into communication requirements. But those are two examples and why we've made revisions, narrowed, linked it just to standards, really kind of resulting from the first comment round process, the roundtable, the reopen comment period. That was very helpful to us.
And just one more before I turn it over. One of the things we added, I think we've added, is this requirement about auditor talking to the audit committee if there are concerns about the management's adoption of pending accounting standards. And currently, management has to disclose in the financial statements if there's a unknown or a possible material effect on the financial statements for a standard that's been issued but not yet adopted. Can you clarify what we mean by concern that the auditor would express to the audit committee?
Hasnat, you want to take an initial shot at that about the concerns that the auditor might have?
Well, the auditor might be concerned about changes to accounting or disclosing processes or systems that are pending coming the new regulation or accounting standards. So the audit committee, the management may not be well prepared for those processes or changes to those processes or internal control structure. So those are some of the types of concerns that we have in the release as to what the audit committee would want to know about that.
So that's distinctly different from management's requirement to disclose in the financial statements the pending effect on the financial statements of pending standards.
It is. And as Hasnat said, if the auditor is going to be performing a quarterly review in 3 months, and the auditor knows that a new standard is going to affect accounting standard on January 1st, and believes that the company has not really substantially put in the requirements to deal with that new standard, or the auditor may be concerned about how the company plans to apply that new accounting standard, it really is to the benefit of the company and the audit committee to hear upfront about that concern, rather than hearing at the end of the review about when the company is about to release its earnings that we don't think the company applied this new accounting standard correctly. So it's really putting them on notice that there's a risk around financial reporting that we see emerging here.
Mr. Ferguson.
Yeah, I have a question that grows out of the requirement that the permission in the standard that the communication can occur orally rather than only in writing. Will the auditor be required to note in the work papers that each specific item to be communicated to the audit committee has in fact been communicated, and with what level of detail do we expect that to be documented? And secondly, how will PCAOB inspectors and the firm's own internal inspectors verify that there's been compliance with these communication requirements, particularly if the communication has been oral?
Jennifer?
Well, first, regarding one of our standards, AS Auditing Standard 3 on audit documentation. Audit documentation, that standard requires that when the auditor performs audit procedures, particularly in the event if it's an oral communication, they must document that compliance with that procedure in their work papers so that an experienced auditor can understand what communication was made. So it's got to be at a level, even though the communication may be oral, the auditor still has a responsibility in accordance with our standards to document what was discussed so that an experienced auditor, which I think then would enable our inspectors to inspect against that and see what was communicated. It wouldn't be a mystery, as well as firms' own internal inspection programs.
So you'd basically look to our AS3 standard
Auditing
to
Standard
determine
3.
the level of detail.
Oh, and we do indicate that too as well, or have a reference to Auditing Standard 3 and AS16, right?
So that documentation standard is, as Jennifer said, such that an experienced auditor with no prior involvement with the audit, the documentation has to be to a level that that person could read it and understand what communications were made. So in essence, I believe, if you don't give a written report and you do the report orally, you pretty much have to document what would have been in the written report.
Okay, thank you.
Any further questions, Stephen? Mr. Harris?
You've already touched on this, but do you have anything more to add on how you've sought to avoid unnecessary costs in developing this standard?
Well, I think what we tried to do is make the standard flexible, or as I said earlier, scalable, so that communications would only be required in the circumstances related to that company. Also, there are certain places in the standard where we've had the auditor only communicate if there's a certain circumstance and they have identified that there's a concern or that the audit committee should know about it for their oversight responsibilities, such as communication of difficult or contentious matters for which the auditor consulted. The remaining part of that requirement also says, and if the auditor determines that it would benefit the audit committee in their oversight responsibilities. So we've tried to, instead of giving everything that the auditor consulted on, which could be many items, only the things that the auditor feels that are helpful to the audit committee in their oversight responsibilities. So that's where we've tried to narrow the standard in those types of ways.
And I think those are very good points. And of course, I think fundamentally, the key point is all of the communication requirements are built on auditing performance obligations. So there are existing audit performance obligations today that the auditor then has to make communications about. So the auditor is not performing new procedures as part of AS16. The auditor is communicating the results of procedures performed as part of the audit. I think another key part about cost was the point that was made in Jessica's comments earlier, that around the fact that in many cases, again, we don't have any jurisdiction over management, but in many cases, management wants to talk to the audit committee and tell the audit committee about their critical accounting estimates, the most complex accounting issues, and how they have dealt with them. And the standard acknowledges that if management does that, as long as the auditor is a part of that conversation, and as long as the auditor feels that communication has been complete, the auditor does not need to repeat those communications. So we're conscious of cost and not requiring the auditor to make communications that management has made in those circumstances. So I think we've thought about this in a number of ways to try to make this the standard scalable, a communication of existing performance obligations, and not redundant of other communications already made by management. And there's probably other factors, but it was an important thought of ours.
Do my colleagues have any other questions?
I have a couple.
Go. Yeah.
Okay. In a couple of instances, the release refers to the auditor communicating to the audit committee, quote, situations in which the auditor identified bias in management's judgments about the amounts and disclosures in the financial statements. Has management bias been a problem in the past, and why did you see the need to focus on it in the standard?
This requirement is linked to this communication requirement is linked to a performance requirement in auditing standard number 14, where the auditor, when looking at estimates, also looks at management bias. And we felt that if the auditor was finding management bias when they're in their evaluation process, that they probably should tell the audit committee that in these instances, in these estimates, we are seeing management bias. And this would, we believe, help the audit committee in their oversight responsibilities and also help the auditor in understanding the audit committee's views.
It's an extremely important aspect, I think, of the communication requirements. As we all know, much of accounting is an estimation process, and certainly the most important aspects of financial reporting and determination of accounting results, there's estimations and judgments involved, and ranges of what a number could be. And so whether or not management is biased in their determination to the degree that they are trying to achieve their targeted earnings or pre-announced earnings and moving from one end of the range to a different end of the range and showing bias in that estimate would be a very important thing for the audit committee to understand about the reasonableness of the financial results. So we think this is an important performance obligation on the auditor to understand that potential bias and address that in their evaluation of the reasonableness of the accounting and disclosures. It's very important also for the audit committee to have that same understanding.
And then finally, Mr. Chairman, you've included a comparison with international standards. And why would you say this standard is an improvement over existing international standards or domestic standards?
Jessica or Jennifer?
Well, I would say in our environment, we know there's requirements today that we've then included from the SEC and related rules. And some of our comments, I know Jessica had talked about that. Some of the auditors, or audit committees even questioned why they needed to receive that. So those are specific required communications for U.S. public companies. That's not something, those requirements, we've seen them be missed, or people challenge if they're even important, even though they are today required by the SEC. But those are some of the things around those accounting policies and practices that are required today by the SEC, that's not applicable in jurisdictions outside the United States. So one, that is a difference. But generally, there's many differences throughout our standards, and the appendix, as you mentioned, talks about the significant differences. Things about the audit strategy and planning, while the IAASB has a general statement just to talk about that, we also say that should include the discussion of when other auditors are used, which you had pointed out as being one of the significant things for investors. We agree with that in our market. Also, the use of specialists, internal auditors, those are things that are not required to be discussed. Also, another significant difference is difficult or contentious matters for which the auditor consulted and for which the auditor believes would be important for the audit committee to know. The IAASB does not have that. We think that's important. The additional requirements around significant unusual transactions is also a difference. So there's a number of differences that we just believe from seeing best practices through our very robust common process are important to be included in this standard and for investors in our markets.
Other questions? Board members, just to touch on a loose end or two, Jessica Watts mentioned the 1980s vintage of AU 380 and its dismissal of communications with audit committees as merely incidental to the process. I suppose one of the things that emerges for this board member from your discussions is the dispersal of related standards over 20 plus years of AU development. None of the board members brought their AICPA standards, but we're talking about a book that's that thick. Speaking for Ferguson and myself, who have had to plow through a lot of literature in our time, I suppose if you're an audit partner or an engagement partner or even a young manager, there's a net gain to efficiency and comprehension if you can now look in one place in AS16 and you can find something that essentially is a codicil and brings together all of the varied points in which communications with audit committees have been touched on over more than 20 years of development by standards. And I should say that I think taking away from these meetings, one of the things we notice from our inspection process, that you mentioned the inspection process as one of the sources of our information that has informed AS16, but we do see examples in which it is of concern to the board that auditors may not know, that firm manuals may not be comprehensive, that over time a firm manual evolves or doesn't evolve, and in fact certain important parts of communication get lost. So when we're talking about not new performance standards, not additional things that auditors have to do in the audit, but things they have to remember that they should tell audit committees, it seems to this board member that there's a great advantage in having them now collected in one place, updated, and in fact, it appears to me to be part of the natural evolution of the administrative process or the process of professions' continuous learning, that audit standards do change and that things that they do evolve. With that sermonette, I will ask my colleagues to vote. Will all the board members approving and accepting and the staff's recommendation, please say aye. Aye.
Aye.
Any opposed? With repeating the thanks from your colleagues on the board, we will adjourn. The vote is unanimous. This concludes our business, and there's no further business to come before this meeting. We should reconvene in a quarter of an hour.
Okay.
For a closed meeting in this room. Thank you all. And thank you again to members of the public and to all of those in attendance on the webcast.